My name is Jack Hanney, and welcome to this week's edition of The Insider. Just earlier today in Bloomberg, Ed Yardeni has raised the odds of a U.S. market meltdown from 20% to 35%. Ed Yardeni says the growing risks of a sharp sell-off have nearly doubled. War in Iran and what many are concerned could be a never-ending war. Now, if you recall, the week before last and the week before that, we had the AI panic with software stocks selling off like Salesforce, Microsoft, with concerns of AI affecting software stocks. Then there was the financial stocks that sold off as a result of AI, and there was the AI panic with stocks selling off. Now, the concern is the war in Iran and the price per barrel of oil skyrocketing. Because of the price per barrel of oil skyrocketing, many say that there'll be a resurgence of inflation and that the costs of goods and products and services will significantly be increased, along with the Supreme Court ruling of Trump's tariffs being illegal, and Scott Bessent saying that could cost up to $1.9 trillion. Now, many are saying that the Feds will not be cutting rates at the March Fed meeting, and chances are won't be cutting rates at the June Fed meeting. So we are seeing a rotation out of tech stocks. We're seeing a sell-off in the stock market. The NASDAQ pre-market after hours last evening was down 600 points, and the Dow was down 1,000 points. Now, many also are saying that this gold bull market is not only mid-cycle, according to MKS PAMP, but some are saying that it's just getting started. As a matter of fact, gold ETFs compared to other ETFs right now only comprises 2% of retail investors' portfolios, just 2%. Whereas back in 2011, gold ETFs comprised 8% of retail investors' portfolios. So currently it stands at just 2% of retail investors' portfolios, and in 2011, it comprised 8%. If you recall, a month ago, JP Morgan said that gold was comprised 3% of retail investors' portfolios, just 3%. And if that number increased to 4.6%, we could see gold at $8,500 an ounce. So as you can imagine, if gold were to comprise 8% of all ETFs back like it did in 2011, where will the price of gold be? JP Morgan, UBS, they're all forecasting a 27% in gold in 2026. And meanwhile, you have Ed Yardeni doubling the probability of a sharp sell-off in stocks. I am not a certified financial investment advisor, nor do I give tax advice. You can visit us at www.patriotgoldgroup.com, or you can call 1-888-488-5190. Again, that's www.patriotgoldgroup.com, or call 1-888-488-5190. Thank you for watching, and I look forward to speaking with you next week on an episode of The Insider.